YouTube mentorship for 2022. I hope you're doing well. Hope you had a wonderful opportunity to study and learn this week and keeping up with the lessons. So we are looking at the E-mini S&P daily chart. This is
Let's go
June
with the
delivery contract month
ICT Study
for
Session,
2022. And I want to kind of like bring you back up to speed
episode
to what
22.
we were looking for over the last weeks or month or so. Remember back here, we had that bearish order block. I outlined that as an area to watch that, and we're entering a seasonal tendency, so we're going to be expecting lower prices. We got lower prices. I showed you the relationship between the dollar because it's risk off. So we have entering a seasonal tendency, so we're remember back here, we had that bearish order block. I outlined that as an area to watch that, and we're entering a seasonal tendency, so we're going to be expecting lower prices. We got lower prices. I showed you the relationship between the dollar because it's risk off. So we have all of the decline taking place in the equities markets. And I said that we would be likely to draw down into this relative equal low. So I'm going to kind of like do things in the TradingView platform. So that way some of you folks that are asking questions in the comment section, like how do I do this and where was this on the platform? Admittedly, most everything I know about TradingView, my own students have taught me. So there's going to be a comment posted and pinned by me underneath this video. It'll be TradingView tips. Okay. If you have a tip that you want to share with the viewers that are new to TradingView, please, by all means, just make a post and outline it as best you can. I'm sure they'll be well received. I might even learn something too. All right, so we're looking at how the market did in fact trade down into our relative equal lows. So this was the draw on liquidity. Okay. Now, when I train my students and when new students come to me, the first thing they want to know is how to pick the right order block, because they know it's one of my concepts. They want to know, which is the entry candle? What's the entry point? Where do I get in at? Okay. And that's the easiest thing out of all the learning. Okay. Once you understand what the market's likely to do, where it's going to draw to, okay, where's it going? Why should it get there? Okay. If you do majority of your studying and watching the tape, okay, reading the tape, which is kind of like what I'm going to outline and showcase in the live streams in May. Just before I get any further in this conversation, the live streams will only be in May. I'm not trying to make an ongoing thing of this. I don't want to promise you, an ongoing thing, but I am going to showcase some things in live sessions. That way you can see how to train yourself to look for these things. Okay. I will not be giving you trade recommendations. Okay. I will not be entering trades in front of you. I'm going to be outlining basically what you saw me do in this mentorship, outlining where this is going to go, and it went there. I'm going to be doing that with intraday charts. Okay. And I'm going to point out certain areas to study, watch how price reacts right here, and look for this type of thing to occur here, because I want you to understand what it's doing. Why is it likely to do what I'm going to outline? Okay. The best thing that can happen is for me to get it wrong sometimes. Okay. So that way it'll disarm you. It'll feel like, okay, well, if I don't get it right, ICT himself didn't get it right here or there. Okay. So I'm going to do my best, obviously, to try to educate you and show you what I think is going to happen. But invariably, there's instances it's going to creep in. It's not going to be accurate. Okay, I'm going to read it wrong, and it's fine. Do not take what I'm saying in my commentaries and or my opinions over the chart that's going to be live. Don't take that as trade advice. Do not take a trade. And I'm going to say this every single time I do the live stream. Don't act on it, because you don't know what I'm doing. You don't know what I'm viewing. You don't know what I'm trying to teach you. None of that. Okay, so you want to sit still and just observe and take notes. They will be recorded. They will be on the YouTube channel for those individuals that are not going to be able to be present. When will those live streams take place? There will be a New York session between, I think I'll start around 8 o'clock in the morning. So that way we can get the chart set up. I'll give you my views overnight, what took place and what I think that counter may present, and kind of like build the mindset. I will not be talking in the chat room. Okay, the little chat thing on the side, you guys will be saying whatever you want to say. I don't care. I'm not going to be looking at that because it'll be a distraction. The agenda that I have for that particular day, it would be very distracting for me to read comments and questions. And because I know your question is important to all of you, no matter how simple it may be, I'll feel compelled to want to answer everything that flashes across the screen, and it'll disrupt my concentration. So I won't be looking at the chat. Okay. I'm not ignoring everybody for the sake of being rude. I'm just ignoring everybody so I can stay on task. Okay, so there's that. But we'll begin around 8 o'clock in the morning, and we'll close it, whenever I feel the need to do so. But I'll be willing to go up to 10:30, 11 o'clock. Okay, which is a very long session. I know. They may not all go that way. I won't be doing it every day either. So it'll be a handpicked, selected day in advance that you'll know about, and I'll post it on the community tab on my YouTube channel. Okay. All right. With all that stuff out of the way, let's get back into the nitty gritty here. So I outlined this area here in this low, and I said this would be the draw on liquidity. So when you're on TradingView, over here there's a little segment where you can have a choice of certain things. Now you can do this, so it looks like this is your bullseye where the market's going to draw to. You're aiming for that, in other words. Or you can use the little magnet icon. I teach with that analogy. Like up here, imagine a magnet of some kind down here. And price is going to be drawn down to that level here. So this is where the liquidity was, and they tapped into it today, right? You knew about it up here. You knew about the order block up here. You know about the seasonal tendency I outlined. And we have this really nice decline here. So I'm going to take you into the marketplace and strip this down a little bit and give you some more details. So we're going to the hourly chart. And this is why I do PowerPoint slides. It's real easy to get to where I want it to be. All right, so we had a run here. Yesterday, this kept pumping higher, 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 higher. Just fell short of this high. And then, so we had a decline, and then the normal pause, and they gapped it down, then rallied it back up. So between this candle's low and this candle's opening, right in here, that's an imbalance, coupled with an actual gap. So I want you to take a look at that. Okay. Now, we have this candle here, small little piece of that one here, this one, this one, this one, and this one. They go just above that area here. This is permissible price action. In other words, this is something you have to get used to. Okay. Look at the bodies of the candle. See how they're staying inside of that imbalance? It reaches for liquidity and stops on these wicks. But the bulk of the volume is being held inside this imbalance. Notice that? So now we have the market release go to the downside. And then here is 9 o'clock in the morning. I'm going to go into 8:30 actually. Let's go down to a 15-minute chart. So here's 9:30. That opening price here. At 9:30, what's actually happening is the equities are opening up. The stock market starts trading. That's when you hear the bell ding, ding, ding.
There you go. Okay, this is lagging a little bit. Okay, so we run.
All of a sudden, everybody's clapping their hands on TV, whatever. That's what's occurring here. It's opening. So it's running a short-term high right here, and then breaks lower. Creates an imbalance here. So on the 15-minute time frame, what do we see? Did it take a high out? Yes. Did it break below low? Yes. Was there displacement? Yes, it was energetic. Did we trade back up into it here? Yes. So in here, you could be a seller and get in sync with the run to try to get positioned for if you are a swing trader or short-term trader. This could be your entry, and then aim for that old relative equal low, which is that blue line here. Remember the two equal lows on the daily chart? I drew a line on. That's what this is here. Okay, and ran down into it today. At 8:30, right there, we're using the opening price. Did price trade above it? Yes, it's in a premium. It's above an old high. That makes it a premium too. I believe it was a young lady, and I apologize, I don't recall, and I didn't make a note of your name, so please don't be offended, but I know I saw it where it was saying something to the effect that you don't understand how it could be in a premium because it's above an old high. Anytime the market trades above an old high, that is a short-term premium because it's going into liquidity. Anytime an old high, that is a short-term premium because it's going into liquidity. Anytime the market trades below an old low, that's a discount. Okay. Now, just like the purposes of what people use overbought, oversold indicators, things can be overbought and still go higher. Things can be oversold or in a discount and keep going lower. Okay. See, that's why I'm suggesting that when people are studying price, they can't just assume that an indicator is overbought, so therefore it's a good sell or a shorting opportunity. It's not always. But if you understand the narrative within market structure is not the answer. It helps you frame an idea, but the idea must be in alignment with the present narrative. Narrative is why should the market go where you think it's going to go on that particular day, based on the climate, the economic calendar events, and the volatility that's being offered for that particular trading session or day. So these are all things that you're going to need to study, and I teach on this YouTube channel. And I'll teach a little bit more when we're doing the live sessions because it'll be more practical then. So that way you're over my shoulder, you're looking at it just like I'm looking at it, and I'll give you my internal dialogue and kind of like what I'm thinking that is the most salient at the moment. So that way your attention is on the right things at the right time. But power 3, which is the open, rally up or manipulation, creating a high, and then the movement lower, and then distribute their shorts below an area where there would be stops. So smart money would be selling short the buy stops here, riding this out, and then offloading their shorts to sell stops below those relative equal lows. Remember, when we see these relative equal lows on the daily chart, traders are going to look at that as a breakout. There's lots of traders out there that have long-term trend following systems and models, and if it breaks below those areas, they want to be short. So that's going to flood the market with what? Market orders to sell at the market. Well, that's a perfect counterpart to smart money being short up here because they want to buy it at a lower price. And while up here, they're aiming down here. Is it hard to believe that when we were already outlining that last week and the week before? No. We have visibility. We have the ability to forecast certain things that should repeat. If the algorithm is in fact in control and we understand what the algorithm is doing, and I'm suggesting that my experience should indicate that we have that, does it deliver? Here it is. Okay, so you're taking the logic of certain principles and concepts and blending them with market structure. We're looking for lower prices, it should reach for a specific low, but also how does the present narrative allow for engagement with the daily range or power 3? Everything I've taught you. So it's the open rally. Smart money enters near the high today above the opening, and they get out down here at an important. Smart money enters near everything I've taught you. So it's the open rally. Smart money enters near the high today above the opening, and they get out down here at an important low, and market closes near the low of the day. Let's go into a 5-minute chart. 1, 2, relative equal highs. You see that? Now, if you're looking at the lower time frame charts, let me get this off here because it's no longer useful. If you're looking at that like that, here's the opening price. You note there's what resting above that? Buy side. So buy stops or buy side liquidity is resting here. So it can run up, and just to the left of that also, you see these highs here? They're real close to one another too. So for good measure, they might want to come up here and clean that down. This is a little too much. I think it's too rich for the expectation to get to that high. But in here is reasonable, but here at least, okay? Market punches up through. Yes, it does take those out. Then it breaks down, comes one more time back above the opening price, and then gives up the ghost and aggressively runs for the sell side below here. Now, for some of you, that would be enough. Getting short up here, buying it back below the lows, and being done and walking away. There's nothing wrong with that if that's your model. But we're going to take a closer look inside of this area here and see what we see. All right. Just drop down into, I'm just going to go right to the 1 minute chart just to save time. All right. So we have in this area where the market ran above those relative equal highs. In this area where the market ran above those relative equal highs. Here they are here. The market runs up, then it breaks down right here. See that right there? That's a swing low. Breaks below it. Was there displacement? Yes. Does it mark come back up into this little area here? Yes. Is it above the opening price? Yes. Is that enough? Sure it is. You can be short there. You have to weather this.
So the market left that small gap around there. I'm gonna mark that just like that. Copy that shit like so.
One more run up into your entry. You may have a little bit of drawdown, but your stop loss, if you're entering this fair value gap, your stop has to be above the very minimum. The candle that creates the fair value gap, that's here. So your stop's got to be above that. For good measure, conservative.
What?
Fair value gap, that's here. So your stop's got to be above. Your stop has to be above the very minimum. The candle that creates the fair value gap, that's here. So your stop's got to be above that. For good measure, conservative, up here. Oh, but ICT, that's a lot. That's a big stop. Well, look how volatile it is. You want to be knocked out of the trade prematurely, or are you just concerned about making the maximum amount of money on your trade, dismissing the level of risk? That's what gamblers do. I'm not trying to teach gambling. So when you're practicing on your demo account, keep that in mind. That way you're not trying to overextend yourself. The sell side below these lows in here, after it hits the fair value gap here, and then one more time into it, below the opening price, it breaks lower and aggressively runs below here. So not a bad little run there. Let's go back up to a 5 minute chart. Okay, and we're going to go look at the afternoon session. Here is 1:35, and I remember I stated at around 1:30. That's when I like to go. Here is hits the fair value gap here, and then one more time into it, below the opening price, it breaks lower and aggressively runs below here. So not a bad little run there. Let's go back up to a 5 minute chart. Okay, and we're going to go look at the afternoon session. Here is 1:35, and I remember I stated at around 1:30. That's when I like to go back in. Now I've taken trades earlier than that, but I'd like to see 1:30. After 1:30, the lunch hour has been smoothed out, and then there's usually some kind of a retracement higher when it's bearish or retracement lower when it's bullish, and you're seeing that here. A retracement higher when it's bearish or retracement lower when it's bullish, and you're seeing that here. The imbalance, relative equal highs, it runs up into that right there. That's an area you can get short on. Market delivers a run lower. Here's another little fair value gap in there. It runs up into that. That's a short.
So 1:30. After that, there's usually a pullback to the upside if we are bearish, which means 130 is around there. So that's the pullback. Let's just mark that out. Why haven't I used this tool? That's it's just good tool, man. That's your 130. There you go. Now it's easily visible for everyone.
Aiming for what? That line here. That's that relative equal low on the daily chart. So today, huge opportunity day. Lots of points that could have been made available. But I did something this morning showing everyone kind of like what reading the tape examples will be like when I'm doing the live session. I did some executions just to prove visibility, to prove I was expecting a certain run, and I believe I was in NASDAQ. Yeah, I was in the NASDAQ. So let's go over to NASDAQ.
You know, I quickly want to look because I know that NASDAQ had yesterday a little bit like a similar day when we just bowled back. So I don't see if there was like a 130 pullback or anything like that. So let's just have a quick look on that. Thank you. So you can see how the yesterday went. Pow pow pow. I mean, I don't know if this shit is random or some shit, but almost the whole day we don't see a slightest pullback. 130 we see a little bit of a pullback, and that's happening towards this gap. So it seems like to me that this is not random. Like it did the pullback exactly in the time that ICT was talking about. Obviously not every day will be like that, but especially if you have like a large range like this, maybe in these kind of days you will have that. But for example, this day or in this price action doesn't really have it. I mean, technically yes, because 130 it kind of starts a pullback to the upside before moving lower, but for example here I guess the pullback is expected when you still expect market to move to the downside, so the sell side objection hadn't been met before the pullback kind of happened. You know what I'm saying? So we got, I don't know about that one. Maybe we wanted to run that low. Let's just quickly see. So you can see I marked that 4-hour swing low. We hadn't swept that yet. 130 gave a pullback, after which we just displaced further to the downside, swept the sell side liquidity. So these kind of things are nice to see when you can apply these concepts quite nicely.
Okay, that's in here. So we're going to zoom in here on this data business. All right, and here is what I had in mind when I was looking at the chart. Woke up this morning. My wife is out of town with my daughter. So I woke up and just because, creature habit, your spouse ain't next to you. So I had insomnia. So I sat up and I was looking at the charts. I said, well, you know what? I see. Well, let me ask you what you see before I do it. Okay. What gave me the backdrop for all this in here, which I'll explain in detail in a moment, but what gave me the realization that this is likely to turn here and go lower? Study the entire fractal that's being shown, okay? Pause the video.
What did you say?
So you just refused on the realization that this is likely to turn. I see. Well, let me ask you what you see before I do it, okay? What gave me the backdrop for all this in here, which I'll explain in detail in a moment, but what gave me the realization that this is likely to turn here and go lower? Study the entire fractal that's being.
What Biden price was that even? His NQ. Oh, I mean, I don't know, it broke structure to the downside.
Being shown, okay? Pause the video. So you just refused. I'm never going to do
Left
it,
these
ICT. Stop
lows
asking you to do it. All right,
unswept.
so we had this high here. We ran above it. And then we had the market shift. So buy stops taken. Breakout artists taken in on the market long. And then relative equal lows broken. So we have a shift in market structure on a 5-minute chart. In a time when it's bearish, we're looking for those relative equal lows to be tagged on the S&P, and this is not the S&P, I understand that, but the expectation is we want to see these two indices go down on the daily chart. So heaviness should be the protocol going into our trading day. In here, we have what? Displacement below these lows. So there's a lot of energy there. So right above that, what do we have? Fair value gap. Oh, there's one right here too. Right. What's that teaching? This is where you do your entry. But ICT, you didn't enter here. Right. I wasn't looking at the chart yet. I'll get to that. It's in my mind. You can read my mind. This fair value gap here, we expect that to stab up into it. So our stop has to at least be in a position where it can weather that. So what does that mean? That means that you have to either have deep pockets and allow for your stop loss to be inside this here, or you use the micros, which is fine. I don't want to do a micro, man. I'm going to be in here $20 per point. Okay, but you have to have an account that will allow for that. If you don't have that, then trade the micro. But I don't want to do that. Okay, gamble, but not because I taught you to do that. So here is the order flow inside of that fair value gap here. Again, a little bit of extra runs above into that fair value gap there. And I'll put another rectangle here so you can get a visual representation of what I mean. I mean, you can clearly see it, obviously, but I want you just to see it by contrast. So this is the rules. This is why I've been teaching you, okay? If there is only one fair value gap, then you just put your entry there, and you don't expect it to go up into any deeper retracement. But because it has another one here, you expect it to stab up into that. Now, I know some of you in here want to be an ICT junior, and you want to be in there on the highest candle when you're selling, you want to be on the lowest candle when you're buying, and I understand. But this isn't always going to happen. So if you're really only trying to aim for that, you're going to miss moves. And if it moves like it did today, that's a heartbreaker because it moved a lot. And if you weren't positioned in it, and you spent the rest of the day kicking yourself about being greedy about trying to get that instead of where I've already taught you, you'll probably miss the other moves that take place later in the afternoon and get nothing for them. All right, so anyway, we had a shift in market structure. We move up into a fair value gap here, and we have a break lower, fair value gap here, relative equal lows. Now look real close, folks, okay? Relative equal lows, a high being taken here. We break down. These two candles move right below here. That's the same thing as these two candles here being broken with this move here. It's a fractal. This whole move here is the same thing here, just smaller. And it creates the same thing. The fair value gap here, market goes up into it, the body's kind of, respecting that low area. Moves a little bit above it, that's fine, but then breaks aggressively lower. Does it take out the low yet? Retraces up in. Now I have two, okay, not one, I have two narratives in play. This one here, where we have a shift in market structure there. So this is a long-term high. Here, we have another break lower with imbalance, so it's an intermediate term high. This is a bigger one than that one, right? So this is a long-term high, intermediate term high. By definition, they're both intermediate term highs because they have imbalances. But this one is lower than this one. And this over here is lower than that one. So this is a turning point, making this, by the hierarchy of swing points and market structure, this is a long-term high. Intermediate term, because of the imbalance. But how they nest together for market structure, long-term, intermediate term. Now, when this is retracing up, this is going to be a short-term high inside of a market structure that is really predisposed to go lower because we have long-term and intermediate term above me. This should respect the underlying order flow and go lower. And I'm looking for that lower price that's below here. Their sell stops resting below that. So as it retraces back up into this up close candle, what is this up close candle? Bearish order block. That's not what you've been teaching us, Mike, on this model. Right. I didn't say that's what this was. I'm telling you how to read the tape. Okay? But I do teach order blocks on the channel. So we're going to go into this right here. So inside this shaded area, this is what I'm going to be executing in. Not with that color on. Okay, that's good enough. May not be your choice, but it's mine now. All right, so we're going to drop into a 1 minute chart. Every time I do this, I always imagine somebody that has a little bit better understanding how to work with the TradingView platform. They probably have a whole lot easier, quicker way of getting